AICPA Town Hall, a high-impact news broadcast to help you navigate the most pressing issues facing the profession. Get timely and critical information, real-time interpretation, and analysis. Learn strategies, best practices, and capabilities to drive long-term success for your clients and organization. Thursdays at 3 p.m. Eastern Time.
Good afternoon and welcome to the AICPA Town Hall series. I'm Eric Auskerson, one of your hosts for today. We've got a great show, plenty of timely topics that we're going to review, and a lot of information that you can even review with your clients as you're meeting with them during the end of tax season. We know this is a very busy time for all of you. We greatly appreciate you being with us for the next hour. So today, we're going to kick things off with a discussion with Michael Faulkner, who's the former chief economist and assistant secretary for economic policy for the U.S. Treasury. He's someone who's played a big role for us when we started the town hall back in the spring of 2020, as he was the key architect behind the PPP program, and he was with us last July. He's going to give us some reflections about the PPP program, and we're also going to talk to him about the economic outlook and a lot of the pressures right now in the overall environment. We're then going to move into a profession in DC update with Barry Melanson. We're going to talk about the recent ESG disclosure requirement that the SEC just announced, and we're also going to talk a little bit about some matters related to Ukraine and the Russia situation. We're then going to move into a tax and technical update with Lisa Simpson and Ed Carl, and we'll close with our open forum. Right now, I'd like Barry Melanson to join me. You all know Barry. Barry's the CEO and president of the AICPA and the broader association. So Barry, we've been doing this for 2 years, so it's great to have you with us today, and you're going to be joining us for the discussion with Michael Faulkner in a moment.
Time flies when you're having fun. Hard to believe 2 years, but really the substance of that is the overwhelming support and attendance from our members and others who participate, and the feedback that we get on what you want in this town hall. And we're very proud to bring it to you, and Eric and the entire team do a great job bringing it to you. And really it's designed to create value for all of our members. And frankly, the times are not getting any simpler. So the breaking news and the breaking information, I hope is very valuable for everyone.
Thanks, Barry. And as you can all see, I'm in the New York studio today. Let's bring up Michael Faulkner. And Michael, right now, he's very prolific, being quoted in the trade press. He's going to be testifying in front of Congress, and he's also a professor at the University of Maryland. So welcome, Michael.
Thanks. It's great to be back with all of you. It's hard to believe that 2 years ago, right now, we were creating the forms and putting the final touches on the interim final rule so that we could start the PPP 2 years ago this coming weekend.
Well, let's kick it off with that topic, because, quoting from the Hamilton musical, you were in the room where it happened in the March of 2020. And right now, so it's March of 2022, and we're seeing a lot of stories in the press about fraud. Actually, back in the spring of 2020, we talked about this. We said this would happen. There would be reviews, and actually, it's kind of working as planned. So, Michael, you and I have had a chance to talk about this, Barry as well. So why don't you just, take us back a little bit to what you were thinking about with the leadership at Treasury as you set this program up. And then let's just talk a little bit about what's happening now with some of this, on the back end of this process, these investigations and uncovering of some fraudulent activities.
Right. I think the most important thing to remember is the dire situation we were in at the time that the CARES Act was being passed. Just to give you some context, when the financial crisis was in play in 2008, the worst week of the financial crisis, we had about 800,000 Americans file for first-time unemployment claims. The week that President Trump signed the CARES Act, we had 6.6 million Americans file for first-time unemployment claims. And so Secretary Mnuchin was very direct. We are going to get this program up and running in a week because we can't have that many millions of Americans applying for first-time unemployment claims. We will break the state unemployment insurance systems. And so what that meant is that we were working with all of you to very quickly get that system up and running. I know for all of your members, it felt like we were building the airplane while it was in the air, because we were. But a very deliberate decision was made that if we are going to provide immediate assistance to the American people, that we are going to have to take care of certain things on the back end. So we were going to do our very best to remove identity fraud and make sure that the banks and lenders that we partnered with maintained their Bank Secrecy Act and Know Your Customer requirements, but that a lot of the other potential fraud we would address during the forgiveness process. Because if we're going to put in place a system where we were to route it, if we were going to do all of the checks on the front end, we were looking at least weeks, if not months, before we could get the system up and running. And that was just unacceptable to the American people, given the situation, the economic and public health situation that we were in.
So Mike, just let's talk a little bit about, in more detail, the process, because you thought about the process and you knew if, and this is something the AICPA is well supported, if you asked for reviews or audits of these small businesses, it could have taken 9 months. So you mirrored this process off of the IRS tax filing self-affirmation of information in the application, and you realized up front that this would not create zero fraud, but there would be processes on the back end to go after that. And then there's also this public-private partnership. We talk so much about this, and the lenders and the CPA firms, as you said, really played a huge role around know your customer and minimizing identity theft.
That's right. I mean, because Treasury played such a key role partnering with the SBA to get this system up and running, we did very much take the point of view that we have with tax filing, which is when Americans file for their taxes, they self-certify that they have accurately provided the information, and then it's subject to audit. And so from the very beginning, we were thinking about what an audit process would look like. And we were using kind of the IRS approach that it would not be purely random, but that it would be based upon the characteristics of the PPP application, that there are certain characteristics where fraud is more likely to be seen, others where fraud's less likely, and that we should target the evaluations on those applications where we're most likely to find fraud. But as we have talked about, a system in which there is no fraud is a system that is extremely expensive to operate, extremely burdensome to participants in the system, and takes a very long time to actually implement. And so a trade-off had to be made between how easy it was for these small businesses to gain access to the program, how quickly we could get it up and running, and therefore whether we were going to mitigate fraud on the back end versus on the front end. And we pushed almost all of it, as I said, with the exception of a lot of the identity theft, we pushed almost all of it to the back end and felt that the forgiveness process was a better place for us to identify fraud. But I remember sitting in the secretary's conference room when we were building out the PPP application, and he did not want something where there's just a bunch of legalese and people just sign at the bottom. He wanted borrowers to explicitly initial next to their certification that they were not engaged in fraud. And then the very next one were the penalties if they had. He wanted borrowers to have to explicitly acknowledge that we would be coming after you if you committed fraud on your application or as part of your forgiveness process.
Well, thanks. And Barry, I just want to bring you in. And one thing I think we all, back in March and April of 2020, nobody really knew where things were going. So a lot of people, took advantage of the program. Some people, their businesses did well in 2020. They didn't know at that time, how things were going to turn out. And if you really look at, what we did, the trusted advisors helping Main Street, Barry, it really did make a huge, huge impact. But this is something that you're very familiar with. And I think as we see these news stories that come out, we got to think about the 99%. The 99% that did go as planned, and the 1% actually that are getting caught right now, that was part of the process. So Barry, your thoughts?
Yeah, Mike was there inside Treasury making those points. We were on the outside making the points into Treasury as well. You sort of had a choice. It was a trade-off. I thought Mike just said it perfectly. Again, put yourself in that frame of mind 2 years ago. The trade-off was, do you want to do something that's agile and fast and is going to make a difference in the marketplace? Or do you want to do something that's going to take longer and is going to have a lot more trappings around it that would try to address fraud? The reality is that agility was absolutely essential. And I think if you look at programs that have come out of any government, but certainly the federal government, this really met the test of agility and meeting the needs of the marketplace where the marketplace was, which was a high degree of uncertainty as to how these small businesses were going to survive. Now, I would add to that, I think where CPA involvement was part of the process, because those are known entities. And as you all recall, we tied a lot into the payroll processing process or providers so that there was legitimacy there as well. We took steps as a profession to even help the goal that Michael had of minimizing the fraud in it, but being agile by CPA involvement. I think the profession did a remarkable job of helping that. And yes, there's going to be failings with systems. The analogy of the IRS, there's fraud in the IRS system. So, I mean, that is a natural outcome. But I think, and we also said, Eric, if you recall some of the videos we did, these town halls, document, and people are going to second guess. 2 years from now, people are going to second guess. And here we are, 2 years from now, people are second guessing. But the reality is that people on the ground, Michael, other people at Treasury, us as it related to the profession, CPA firms, CFOs and companies, we were dealing with the real world issues of really continuity of a small business and reducing the unemployment base really in this country with PPP. I frankly think when the textbooks are written or the studies are written or whatever, it was a marvelous execution, not without some problems, but a marvelous execution of an unprecedented problem.
Well, Mike, I'll give you a final comment here before we move on to the economic outlook.
Yeah, just building on what Barry said, it very much was a public-private partnership. There were certain elements that obviously government had to come in and do, particularly with the resources side. But we never could have accomplished what we did in the speed we did were it not for the 5,400 lenders that participated and also working with organizations like AICPA so that we could understand the type of documentation that borrowers would be bringing, the situations they would be finding themselves in, and really making sure that we quickly address the questions that were out there. And I said it last time, let me say it again, your assistance on forgiveness was extraordinarily helpful. The fact that you built an online platform to help borrowers with forgiveness, I was extremely grateful for the partnership that AICPA provided.
Well, thank you. And we look forward to just continuing this discussion with you, and hopefully there will be some good history books written on this, because I think we can learn a lot from the public-private partnership, and we do more of that in the future. Well, moving on now, Mike, we want to talk about the economic outlook. I know this is something you're thinking a lot about. So to kick things off, looking at inflation, looking at the geopolitical pressures, what are the causes, and then we can move into where you see things going.
Sure. So, as we reopened the economy last summer, it was, inevitable that we were going to get some amount of inflation, right? When the pandemic initially hit, we had some deflation. And so merely returning to normal, we were going to have some inflation. But it was really about a year ago that you started to notice the increase in inflation, right? So if you look at the last year, we've had nearly an 8% increase in consumer prices. And that began right around the March 2021 timeframe. And my assessment is that consumers were already in a very strong position. Programs like PPP, enhanced unemployment benefits, the economic impact payments, households' income really hung in there during the pandemic. And we did not really need to throw another 1.9 trillion into the economy last March, because we already had pretty strong demand and we were still trying to bring supply back online. So the idea that we would throw even more money and buoy demand even more when we weren't yet addressing some of the supply chain constraints and fully having people return to the workforce just threw too much money into the system and created some excess inflation. We expect that that was going to start to abate and that inflation rates would come down. But now, of course, with the tensions in Europe and Ukraine, what the impact of that is on energy supply and on food, right? Because it's not just that there's oil and gas coming out of Russia, but there's also significant portion of grains coming out of both Ukraine and Russia. It looks like we could have some of that inflation persist longer than we thought. And that's the ongoing concern. And that's going to require the Fed, therefore, to intervene more than what we had previously anticipated, such that the Fed recently suggested that it could be doing 7 rate increases this year.
So, Mike, when these firms are talking to their business clients right now, what type of discussion should they have around rates? So the rates have moved. What should they be doing related to their financing needs?
Right. So short-term rates are therefore going to be rising this year, right? Each time the Fed notches up, that's going to affect any kind of rate that's tied to short-term rates like prime. To the extent that people wanted to refinance into something longer term, the issue is the long rates pretty much already incorporate where the market expects the Fed to be going. So, I think that borrowers and small businesses need to brace for increases in any kind of variable rate funding and understand that those increases are going to be coming on top of some of the cost pressure they're already seeing from the inflation causing increases in the cost of raw materials and goods.
So the working capital rates will be going up, and right now the term loans they've corrected somewhat. So when you look at the economy here, and Barry, you can jump in after this comment from Mike. There's Goldman came out, gave us prediction that there's a 35% chance of recession. I remember being in this town hall last March with Barry, and we were looking at record growth rates, and now some people are predicting a potential recession. So what's your thoughts on that and the housing market and just other drivers?
Yeah, I mean, we're certainly looking at slower growth and higher inflation environment. I think stagflation is an accurate forecast of what we're going to be looking at. I don't know yet that we're going to go into recession, but this many rate increases in a single year does have the potential that the Fed could overshoot and raise rates too high and push us into recession. Certainly we're going to see drags in the housing sector as mortgage rates climb. You're going to see fewer purchases of homes. You've also got energy prices rising, and that has effects throughout all sectors because every industry is reliant on transportation to some extent. So plus augment that with some of the food crisis, the food shortages we could be seeing more in Europe than here in the United States. And we've got some headwinds. And what I'd like to see, obviously, is a more supply-focused approach in terms of fiscal policy, the administration doing more to buoy some of the supply constraints that we're confronting right now. The last thing I think we need is to throw more money at the system and try to buoy demand.
Mike, it's interesting, when we think about entrepreneurism, which obviously when we were talking about the support programs at the beginning of COVID, you connected very directly as a government agency to how to, what does business need to do to survive and keep the economy going? What we have today, in effect, and I wonder if you have any thoughts on this, is a whole host of entrepreneurs who never lived through these fact patterns before. Because you almost have to go back to the early 80s when now our interest rates aren't as high, but inflation, rising interest rates, in and out of recessions, those types of things that occurred in the 80s, late 70s and early 80s. I wonder if you have any advice or thought process, for the small business entrepreneur. What are the things that they really ought to be focused on and trying to manage in this process? Because it's a different set of facts for them.
Yeah, it is. A higher inflation environment means that it's going to be more difficult to absorb some of the price increases that come, right? If you're in a 1.5% inflation environment, And if you're a little slow to adjust as your input costs are going up, it's not as impactful as if you're in a 5 to 6% inflation environment. So, I know it can be disappointing when small businesses have to raise prices on consumers because consumers feel it. But as prices increase even faster, unfortunately, that's going to be part of the new norm is that small businesses may have to raise prices more quickly. It also, raises the need to have some more capital in reserve so that you can, weather some of the shocks that are potentially to come, both from price increases as well as some of the impacts on customers. So I would say, one of the most fortunate things we had going into the pandemic is that balance sheets were pretty strong. And that's going to be even more necessary as we go into a little bit more economic turbulence.
And of course, a big one is managing human capital because of the pressures of salary increases, the whole unsettled nature of the workforce today. That's a huge one and really, really critical for small business as well.
Right. And that's the other thing is that we're seeing a quits rate higher than anything we've ever seen. There are 11.3 million job openings out there, and we're only about 2 million short of the employment levels we had pre-pandemic. So there are a lot of positions out there for which there are not workers. And that means there's a lot of bargaining power on the position of employees right now. That's increasing turnover quite a lot. And it means that not just from your compensation package, but also just, as you said, your employee relations. How much are you investing in your employees? How much are you building relationships with them is more important than ever because they've got lots of outside opportunities, particularly your skilled labor.
Absolutely. You just hear again and again about, where, companies are supporting the hybrid approach. There's just a lot more options for employees to, find new employers. So Mike, just maybe a couple of other questions just on oil. It's something that, where do you see that going? The impact of the oil supply. You talked a little bit about the supply chain. How do you see that folding out? And then anything else? You recently commented about, what was going on with some of the sanctions on Russia and China's role. So,
right. So, where oil goes depends entirely upon how much longer things go on in Ukraine and how much longer, therefore, some of the sanctions stay in place on Russia and what the resolution of that is, coupled with how much other countries, including the U.S., bring some supply back online. So there has been some discussions about other countries perhaps increasing supply. Not surprisingly, I'd like to see greater ease in bringing domestic supply back online, because I think it's important to remind people that even if the price of oil is $100 a barrel, there's a difference between that $100 price staying here in the United States because it goes back into the U.S. economy because we purchased that oil from domestic production versus that same $100 a barrel coming from abroad, and therefore that $100 leaves the U.S. economy. So I really think that the Biden administration should reconsider accelerating access to leases and the permitting of additional drilling domestically in order to curb some of the supply. I know there are some efforts to release from the Strategic Petroleum Reserve, but that's not a sustainable type of program. So I'd like to encourage the administration to see what we can do to bring domestic supply back online. In terms of some of the sanctions, I had the opportunity to appear on some programs about that. I think the effectiveness of them really does depend upon the role that the Chinese are looking to play. So, the Chinese have stayed somewhat on the sidelines on their participation in them. And the question is, how much does that facilitate Russia still having access to international trade? How much are, the Russians now selling petroleum products to the Chinese, and the Chinese are therefore purchasing less from others? And so if that's the case, then the sanctions aren't going to bite as much. Also, to what extent are the Chinese providing access to global banking? And there's actually a shift now from nations away from things like the SWIFT system to a more Chinese-based financial system. I think we have to think, we get a lot of benefits from being the hub of global financial transactions. And I think that the Chinese are potentially looking at this as a way to increase their role in global financial transactions. And so that's something that we need to manage as we think about our sanctions policy.
It's a complex world we're living in here, Barry. So just any comments on just all of these, and thank you, Mike. I mean, just a fantastic overview of a lot of issues. And these are the types of things that I think that the firms can bring to their clients as they're, completing this tax filing season and have some of these trusted advisor discussions. Barry?
Well, the only thing I'll add is in a moment, we'll talk about a little bit about Ukraine and the sanction issues as it relates to the practice of public accounting or being a CFO and some of the things to be wary about in that environment. So I think it's a very complex environment, as you said, Eric, and Mike laid out. And frankly, where the control valves are, Michael didn't really talk about that, but, he talked about the Chinese influence, but really, how these decisions are made and implemented. In a lot of ways, again, it's just like I said in the entrepreneurial space, it's people going through these types of challenges that have never been through them before. And so to a large degree, it's a bit of a lot of people who are not experienced per se in this type of conflict and these types of sanctions. They're the most comprehensive economic sanctions from what I have seen that have ever attempted to be implemented. And so it just adds every day to the complexity.
Well, Mike, thank you. I want to, thank you because you did your partnership. You made yourself available. Lisa Simpson and I and others were on countless calls with you. You answered so many questions that were brought to us by the town hall attendees. So even before you joined us, you were part of these sessions. So just on behalf of we've got close to 8,000 people on today. On behalf of all of the town hall attendees, thanks for your partnership. Thanks for what you did in 2020 and beyond. And thanks for just participating today, and we look forward to continuing these strategic discussions with you.
Absolutely, and let me thank all of your members for all of the work you did. There was a lot of documentation that small businesses needed to provide to their lenders for both the initial application and the forgiveness process. And I know the work that CPAs around the nation did to support all of those small businesses during the pandemic. So this was very much not just an all of government, but all of nation activity to make sure that the American people thrived during the pandemic. So thank you for everything your profession did to step up and really help America's small businesses.
Well said. Thank you very much. We look forward to having you on again sometime soon. So with that, we're now going to move to the next portion of today's town hall, which is going to be a profession update with Barry. So Barry, I'll let you jump right into it. There's a lot of things that you've been talking to the membership around the Russian war against Ukraine.
Yeah, I really just want to raise awareness on this. We talk a lot about the trusted advisor role, and obviously many people listening are involved in, financial reporting in some type of way. As I just said in the dialogue with Michael, these are the most comprehensive and the most complex economic sanctions rules in the history of the world. And what you really have here is some potential unintended consequences or some things that might not be thought about. And as it relates to the trusted advisor role, I really recommend that everybody involved in any way with a client, or if you're in a CFO, a controller role, that the question be put on the table. Are there applications of the sanctions that are applicable either to our business or our customer base in some form or fashion? Because the rules actually get into sort of different levers. It's not just a direct customer, but the customer of the customer. And I'm not expecting, and nor I don't think anyone expects, all of the CPAs to be expert on all of these things. But I do think in the trusted advisor role, the raising of the issue, the potential that could be there for a client is a very important notion. And if there's an audit involved, compliance with these has some ramifications as to related to compliance with laws and regulations. And so I just raised that from a quality perspective. It's something that ought to be on the agenda in the discussion with the owner or the board, depending on the size of the entity. If you're the CFO, up channel in the business. But don't just stop, well, we don't do business in Russia, because it's way more complicated and it's way deeper than that particular environment. And so I just put it on the agenda. And I think, Eric, that we can sort of segue into ESG then.
All right, Barry. Well, thank you. So we are going to segue into ESG. We're going to talk about some pretty strong forces that are, driving ESG forward in the marketplace. Just recently, last week, there was the SEC proposed disclosure rule. So that's one of these drivers that you're going to talk about. And Barry, when we look at adoption in the marketplace, be it a technology, be it a new service line, we can reference the Hemingway quote that things happen gradually, then suddenly. And it does feel like these big forces right now are all adding up. In 2020, there's going to be a lot going on in ESG, and I know you are one of the leaders here in the world on what's happening with ESG. So why don't you take the audience through what's going on?
Yeah, and maybe the most important first point is just Eric just mentioned SEC, and if you don't touch SEC, please don't tune this out, because it is much deeper and wider than ultimately just public companies in the United States. And let me just sort of paint that picture for you. The three bullets on the right of this screen really talk about key drivers. You can think of them as really fundamental events. Now, we've been talking about this was coming for a long time. We go back to the quote, but there is sort of a convergence of elements here. First off, in November, there was an announcement of the formation of a new international standards board to set standards. So as accountants, standards in our sort of space, that is just sort of right into our sweet spot, right? A lot of the work that we do as a profession is on the basis of standards. It's on the basis of compliance and reporting and the like. And that is now coming to fruition. And I won't walk you through all of the minutiae of how that's all coming together and mergers of a bunch of organizations. But what the substantive point is that there was a multitude of different measurements and standards and all of those types of things. And there will be an international sustainability board. It's been announced as people. It's being, it's really hitting the ground. It really becomes into fruition shortly. There will be standards that will be exposed. There's going to be adoption of some of the existing standards that's been in the marketplace. And that's very important, because the rules that come out of this through regulation, as Eric mentioned, the SEC rule, they're going to have further reach than just the entity itself. There's going to be, for instance, in the emissions area, level 3 emissions, it's so-called, which really digs into the supply chain and the accumulation of information. It can be very small businesses that are going to be providing information up channel or down channel in the supply chain, and that are going to be part of this process. But then maybe the most important part is this really is about market forces. Yes, there's political debate and certainly political disagreement on these issues, and maybe people will challenge the SEC rule, and it certainly will change from its exposure. But the market forces are very, very strong. And in fact, to a large degree, the market forces in the US are catching up to the rest of the world as far as what's expected from investor perspective, multi-stakeholders. And it's not just investors. It's not just investors in a capital market system. It's also lenders who are looking at how do we sort of allocate our resources from a lending perspective? Do we look at companies that embrace or at least report on ESG, which could be private companies? The private equity space is big time and sort of setting expectations of what private companies do in this particular space. And it will continue to evolve. No one can predict with certainty is exactly how it's going to look. But I think it's a very important notion to think about it in the context of what's the sweet spot of the profession. Our role in this space is sort of ours to lose. Believe me, there's a lot of people outside the profession that want to have key roles in this developing and multi-trillion-dollar space that's going to occur. But when you think about the combination of our members, CPAs being in CFO roles, and then outside firms, what you're really talking about here is a system of quality control or internal controls that generates this information inside of a business. It's about the gathering of that information in accordance with those controls. It's about reporting on it internally and telling a story internally. Ultimately, it's about reporting externally, depending on the company, maybe externally to the lead in a supply chain or in a regulatory environment, and then ultimately assurance over that space. And we have been talking about this explosion of what's called business information, not just financial information. And the future of the profession and the growth of the profession and the importance of the profession in this broader footprint of business information is really playing out in this space. Initially, it's going to be the flagship. It'll be in the environmental or the natural capital area, but it's going to grow into social and governance and employee information, et cetera. And this is the movement of what business information is about. And you can think back 100 years, and it was about the demand for good, solid financial information. Today, it's market-driven forces in a lot of ways, followed by regulation of broader business information flows, not just financial flows. And as I said, those 5 elements are our sweet spot. No one's guaranteeing our profession's role in this. It's about our profession seizing this opportunity, and it's about our profession delivering on its quality and its trusted advisor role in what the market is really demanding.
Well, Barry, it's a live show. There's questions coming in. One of the questions was this an overreach by the SEC? We're going to have future sessions on this. We're not going to clear this more detailed slide today. There's a 60-day comment period. A lot of people are encouraging companies and firms to respond. So just we got to keep moving, but just a comment on that question.
Well, a really quick comment on that is it could be. Time will tell, and responders will tell, and the government will decide, and maybe the courts. That's all potentially true. But what I would encourage people, and what I say to our members is, whether it is or not becomes somewhat of a judgment call or your political opinion even. But I would encourage you put that to the side and really think about this broader notion of business information, even if it evolves, even if it is an overreach and it becomes narrower. The market forces for this information to flow is a very important place for our profession to be connected.
Thanks, Barry. And one thing that I wake up and think about every day are all the technology companies that are helping transform the practice of accounting. And in the ESG category, there's 1,800 startups right now. They're not all focused on the profession, but there's a lot of innovation occurring. And one way we're going to help, get our arms around how to support, in particular, the mid-tier businesses, because as you said, the scope 3, this is going to have tentacles into smaller businesses, not just the public market, is through solutions. And one program we have is the Startup Accelerator, and we actually put together a special cohort of ESG companies. You see these on the right, and we're learning from them. You learn from the suppliers. We learn from the marketplace. So just a lot happening here, and we're going to be talking about the standards evolution. We're going to be talking about the regulation evolution, and we'll be talking about solutions as this unfolds. So definitely a topic that we'll have on future town halls. But now, Barry, this brings us to the remainder of the legislative calendar for 2022. So we don't have Mark Peterson here today, but I think you can cover some of this.
Here's the headline in this. While we're on, the beginning of April tomorrow, it feels like it's a long way to go towards the end of the year. The reality, as far as legislative days, are very, very narrow, very small. So anything moving along is going to face this sort of time challenge. Clearly, that's exacerbated by a Supreme Court nominee and other sort of political issues. Obviously, the war involvement is there as well. And, depending on what they want to debate on supplemental for COVID, and there will be probably some debate on that, probably not support programs for businesses or individuals, but more supporting sort of the aspects of like testing and the vaccines and things of that nature. And so there's just limited time, and the reconciliation bill actually expires at the end of the fiscal year. So they can't use beyond that. They can't use reconciliation if they still want to use it to try to move something through Congress on a 50% vote in the Senate. I would say reconciliation passing is sort of hanging on by its fingertips. It's barely got life. It doesn't mean it's absolutely dead, but it's probably highly unlikely. And then, of course, you have Congress going through recesses and the entire House and a third of the Senate up for election in November. And so the likelihood of a significant legislative agenda is probably pretty low. There will be some things probably in the lame duck about tax extenders to get passed. And as I said, major reform probably dead, maybe something extremely scaled down and narrow, but even that takes an alignment of good graces to get that through the system at this point.
Well, thanks, Barry. I mean, we've covered a lot in the first 35 minutes here. Hopefully these slides are helpful, both of the firms and many of the employers, companies that are on today. And we're now going to move into a technical update session. So, Barry, look forward to having you back at Open Forum. So let's bring Lisa Simpson up and Ed Carl. So, Lisa, I'll let you take this away.
Thanks, Eric. Ed, welcome, and thanks for coming back to join us to talk about this complicated issue that's just beginning to pop up around pass-through entity tax regimes. We're going to have a little bit of controversy. Is it PTE or is it PTET? I feel like we're talking about ERC and ERTC all over again.
I'm not going to set the standard on this one. I'll let people use their imagination. So thank you for having me again, Lisa. This is an opportunity to start to highlight the availability of this pass-through regime, whether you call it PTE tax or PTET, however you want to call it. It's an opportunity, and we're just beginning the conversation, Lisa. I think we're going to have to re-examine this sometime after filing season. But, it starts with the TCJA $10,000 SALT cap that was imposed by tax reform. And Connecticut was the first state that created a workaround using a pass-through mechanism. And since then, we've had 21 additional states. We have 22 states that have some kind of a SALT cap workaround. And frankly, there are 7 additional states with proposed bills. So there's a lot going on in this space. And frankly, each state has their own approach to this. They vary on so many issues within their proposals or their legislation: eligibility, the way you elect, the actual way you provide a benefit to the individuals. Do you have to pay or do you get reduced income? I mean, the types of forms and when you pay and et cetera, et cetera. So it's quite complicated and there's a lot to look at. But why don't we move on to the next slide?
And so, and a lot of us remember, TCJA becoming effective in 2018, and then you said Connecticut passed their workaround. So how did we get here? What has the IRS given us or not?
Right. So the end of 2020, the IRS in essence blessed an approach for a workaround by issuing notice 2020-75. Now they clearly said in the notice that this was just the first piece and that they were going to issue regulations to further clarify. They have not. There's no additional guidance. This is not a new story for us. We've seen this in many areas where there is a vacuum of understanding and a vacuum of needed guidance, and this is one of the areas. But as a first start, our members should understand the notice. It's not that long, but the notice should be read. It should be understood, and quite a few considerations in this area. But so what can practitioners do now, Lisa? You and I talked about this. It's at the busiest part of tax season. What do you do? And
yeah, I'm sorry. Let me interrupt you there for just a second. If we can. There's a question on here that I wanted to dig into just a little bit because it seems interesting. When is a tax actually paid and a liability incurred? So I think what you all you're trying to tell us is that every state is going to do something different, and some states might have it based on a deposit actually counting as a tax being paid versus other states saying a different treatment. Is that the gist of it?
Well, part of it is understanding the language in the notice. So, we have a sense as to when a tax is actually paid and when you take advantage of it on a cash basis. But in this particular case, it's going to be a little bit different, and you have to understand what the the notice talks about. So there's so many very peculiar provisions related to PTE, and you have to understand the notice itself. It's not sort of what you would normally think about as a tax practitioner.
So that's why you're asking us to use that word patience that we talk about on the next slide.
On the next slide is there has to be a lot of patience, and frankly, go to that next slide. So we're getting questions from a lot of our members, different size firms. It doesn't matter the size firm, everyone has similar questions. So I would say number one is our members should find an opportunity after tax season to do a deeper dive. As you said or pointed out, we're getting questions from a lot of our members. It doesn't matter the size of the practice, they're all having the same questions. And because of that, we've formed a task force. We've actually pulled from about a half a dozen of our committees to take some of those committee members and put them on a task force to try to dive into this. And frankly, the key point of all this has come up earlier. I think Eric mentioned it regarding PPP, and Barry mentioned it a few minutes ago. This is another opportunity in the trusted business advisor space for our members. It's a key area. And remember also that there is a sort of a finite window there, because most of the individual provisions from tax reform from TCJA sunset December 31st, 2025, including the SALT cap. It's going to go away. So to the extent that there is an advantage that could be taken by our members on behalf of their clients, that window is narrow. And so I just want to bring it up now. I know people are busy, but it's a good opportunity to start thinking about it.
And so practitioners are going to have to dig in a little deeper with things like where the pass-through entity owners are living now. We had so many people move during the pandemic. So is that impacting?
It does impact, because to the extent that, if you had, excuse me, a partnership and all of the owners are in one state, and you take advantage of that state's PTE tax provision, then you're okay. But if you have partners living in different states and they're not in the state where you're electing into the PTE, then that partner is not going to get an advantage. So you're going to have to figure out how to, make them whole again. So it complicates the situation. So there, again, as you're saying, there are a lot of considerations, including that one. And we found in the last 2 years with the pandemic that there were a lot of people who were mobile. They were working in different spots. Now where offices are opening up, some people are not coming back. Right. And they're going to want to work from a remote perspective. So it's something that CPAs will have to dig into on behalf of their clients.
So let's shift to some good news, which is that we do have resources that we want to make sure that our attendees know about. The first one that I'm going to call out, and Ed's going to second this with me, there's a great podcast with what I'm calling our A-team, Alex, Aaron, and Annette. April and Annette, sorry, that it's about 20-25 minutes. It's going to go into a lot of what we covered very quickly. So I really do want to encourage you to listen to that Tax Odyssey podcast.
Yeah, Annette Nellen, who's a former TEC chair, and Alex Scott on my team, and April, who does the Tax Odyssey series. She does a terrific job on our team. So here at AICPA. So listen to that. Yeah, so let's go into data security. You talk about Russia, Ukraine. Data security is always should be always high on our radar screen. And frankly, our tax section team has had at least 10 communications out to membership about data security. We see it from IRS, particularly during filing season. There was something I received today from IRS, always worried about identity theft and cybersecurity, et cetera. So we have heightened risk. The administration has mentioned numerous times about the reactions to some of the sanctions that are being imposed on Russia could be an increased risk of hacking. So there are increased risks. We have to be vigilant about that. It's not untimely to mention it. I know people are busy to think about this. Also, frankly, when our members renewed their PTINs at the end of last year, the beginning of this year, there's a box on the renewal form, online renewal form, that you have to check that you are aware that there is a written requirement for having a security plan. And I just saw something that's on the screen that you're looking at on this slide, but there was a notification from the Return Preparer Office at IRS last week to many of our members, highlighting that requirement to have a written security plan. And I've gotten, coming out of that email from IRS, members have asked me, Ed, I thought CPAs had an exemption from the Gramm-Leach-Bliley requirement to have a written plan, and that's not true. There was some confusion. So there were two basic requirements of the Gramm-Leach-Bliley Act, and one was the financial privacy rule, which we did get an exemption for CPAs. You'll know that by the annual statement you get from your banks, for example, that you have to have a privacy statement. CPAs don't have to do that. They're exempt from that. But they're not exempt from the safeguards rule. And that means you have to have a written security plan in place. And frankly, the FTC has worked on some updates to those rules that came out last fall, so that those rules, the rules have to be updated in CPA offices, but you need a written plan. And more importantly, you need to protect your systems and data. And we do have, as you're pointing out, a lot of resources in that area.
Yeah, and we've talked recently on the town halls about that increased cybersecurity risk. So really quickly, just wanted to point out a lot of the resources that we have available. That first bullet gives you a kind of a long list of resources, but included in there for tax section members is a template that will comply with Gramm-Leach. Gramm-Leach-Bliley, yep, mixing up my names today. Sorry about that. Thank you, Ed, for covering these tax topics. We've got a little bit of time left. So really quickly, there's a lot of press about the billionaires tax that came out and some of the other proposals that were in the Biden budget that was released this week, and then the Treasury Green Book. So in about a minute, should we be worrying about those right now, or should we wait to see if legislation actually comes out?
Yeah, the answer is no, don't be worried about it now. So the Treasury Green Book are the revenue proposals that are part of the administration's budget. None of it. I mean, we just went through finalizing the budget that should have been finished by October 1st of last year. We just did that, frankly, several weeks ago. That's where items in the Green Book would be enacted through legislation. It can't happen by the administration's request. It is something high on a high priority, but it has to be enacted. And frankly, we talked about a lot of the provisions that were in the Green Books, for example, raising the corporate rate to 28%, or raising the highest marginal individual rate, or the so-called minimum tax for billionaires, in essence, is what it is, a minimum tax. We discussed a lot of those as part of the BBB conversation late last fall into the early part of this year. So it's not new. So don't worry about it now. More to
Great.
come about that.
And you got some good news to share about some additional notices.
Yeah, all of you know we've been working really hard on the IRS backlog, and we've had some ideas that IRS could implement immediately. One of those ideas was suspending notices, and last Friday they suspended an additional 10 notices related primarily to 990s and 5500s. So that's good news, and we appreciate the different additional suspensions. We're going to continue to work. Our whole team in Washington is hard at work and trying to help with the backlog, and we're not going to stop on that.
Awesome. Thank you. I'm going to give you a heads up. I'm going to hit you with some ERC questions and K2, K3 in open forum. So to that point, in your slide deck, you've got some recent statistics on forgiveness. I'm just going to skip through those so that we can go ahead and move into open forum. So Eric and Barry, if you all want to join us, we'll hit some questions. And Ed, can I
do that? And just you can make one comment here, Lisa. Just with Falk and Duran, look, 90% of the total loan value, things are moving with forgiveness. There are some firms though that still have some applications out there. They need to get those done. But I think this is excellent. Let's move to the open forum. There's a lot. I mean, Lisa, you're looking at the questions. We got a lot of questions coming in. One is just on you did, I think, reference this in the resources, but a toolkit for the small firms related to the security kind of policy, the checklist there.
Yeah, if they'll download the slides and go to those links that we've given them, they'll get some great information on how to set up that data security plan. So Ed, is there anything on K2, K3 to update our anxious members on? There's no referral, right?
A lot of things going on behind the scenes, but nothing that no good news that we can announce right now. Frankly, I think our members need to be really careful. At this point, they filed extensions, and we'll continue to work on this. There's some conversation on the Hill that we've heard about this week where they're expressing some concerns about the impact of K2, K3. The flip side of that is that there needs to be a mechanism to report certain foreign items. On the other hand, they came out with an approach that was a little bit overbearing at the worst possible time with such huge backlogs. And we just saw information from the National Taxpayer Advocate 2 days ago expressing additional concerns with still about 15 million backlog of returns. So we don't want to add to that with K2, K3, which is why we continue to push. But it's a hard one. No news just yet.
Thanks, Ed. Barry, we got a full set of questions here. We unpack them and we leverage these questions on the newsletter we send out early next week. But Barry, on ESG, so you wouldn't be surprised to hear this, that there's some people saying, wow, just what we need, a whole new framework and standard to be working through with our clients. So one reference on this is like SOC 1, SOC 2. You look at that, you look at how that's evolved. It's a must-have service today for cloud computing. So there's commentary here saying, what are we doing? And they want to know what's the AICPA position on this. You commented a little bit on that, but why don't you just expand a little bit further? And we are kind of in the 2-minute bell here right now.
Yeah, look, I mean, the market forces are there. Employees, investors, private equity, all are demanding this. And again, you can have your opinions about whether that's good or bad, and you're entitled to your opinions on that. But it is a business reporting environment, which is frankly our sweet spot, and it's our opportunity. Others will seek to be providers there. Strategically, that's not going to be a long-term positive position for the profession if we sort of avoid that. There are not requirements that it's got to be done by CPAs. It is sort of a market forces decision, and firms will see it as opportunities, and some will see it as not. I don't think sort of ignoring the trends in this space, however, is good for the profession either. And the standards are going to be, I think be helpful for the profession, because right now there are a multitude of things that companies can do, and it's going to narrow down that particular environment. And for non-public companies, it's going to take time to build up. It's not going to all happen overnight, but it is something you need to be aware of.
So with that, Barry, Lisa, and Ed, let's bring the slides back up. We always try to leave you with a summary now. We covered a lot today. We covered a lot. Thanks for your attention. We know you're so busy right now. It being March 31st is a few weeks till the end of tax filing season. So there's a summary slide. We've got all of the recent town halls available for you to watch, share with others in your firm or your company. And we are active here on social media. I actually today tweeted out, a 2-minute video that Chairman Gensler had on ESG. So you could watch that if you go to my Twitter handle. Lisa is as active as ever on Twitter, posting information all the time. So here's the next town hall is April 21st. So we're not going to be with you for 3 weeks. Hope you have a good end. Barry, Lisa, any parting comments?
We know this is a busy time. We appreciate people's participation, and stay attuned if anything breaks in some of these areas that you just asked about.
Absolutely.
Lisa?
See you in a few weeks.
See you in a few weeks. Okay, thanks. That's all for now.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.